Welcome back. Let's move on to another corporate conversation. Shares of Intellect Design Arena continue to remain under pressure. Remember, the stock was down close to about 15% on Friday after posting a weak set of Q4 numbers. One of the key reasons for the weakness in Q4 is that the government e-marketplace contract, the GEM contract, largely ended in the quarter gone by. We have with us Arun Jain, Chairman and MD of Intellect Design Arena, to take a few questions. Mr. Jain, morning. This is Rima here. The impact of the GEM contract aside, the global e-marketplace aside, the revenue growth last year was close to about 14%. And I know in the past you've always maintained that your company is designed for about a 20% growth. So you've fallen short of that aspiration. So if you could just lay the context, what happened in FY24 and what can you guide for FY25?
Thank you for inviting me for the conversation. So stock has taken a beating, which is not required, because whatever we have discussed in the last conversation on the TV media is that GEM was not profitable, though it was adding a revenue to the top line, which we have published the GEM number, which is clearly visible. We grown 7% quarter on quarter. Our EBITDA numbers are improved by 2 percentage points, so 20%, it moved to 20 to 23%. That's what we guided the market. And DSO has come down from 110 to less than 100 days without GEM. So these are the right metrics which we are tracking down. So 14% growth is lower than the design growth of 20%. So that's what we are looking. 3-year LTM. 3-year LTM is still 19%. So the quarter-to-quarter prediction in a product model is a difficult thing. Last year, we lost 2 large deals. One because of political reason with one of the North American country, where we were almost chosen party, but because the Canadian government didn't want to work with Indian vendor, we lost that deal and that RFP got cancelled. And the second, GEM last quarter revenue. So these are the 2 major blocks of shortfall between 20% design growth and actually what we have achieved.
Sir, I understand that while quarter-on-quarter prediction is, close to impossible for a product company, but 14% growth last year, and even in the conference call, you're guiding for a 15% revenue growth for FY25 if you remove the GEM impact. So again, it's not still at that 20%. So what are you baking in for FY25? How do you get to 15%, and why not 20?
Yeah, we love to have 20% growth, and we designed the business plan for 20% growth. But now, last year we achieved 14%, so we want to be cautious with the investor to keep it at the same level at 15% growth numbers, which we are baking in for 25 number. But your EBITDA margin we may improve from 22% by another 2% more, so it could be 24% number could be there. In EBITDA side, DSO will be improving. So overall, I think and we have an investment to make in AI business. So eMACH.ai is really taking a big traction right now. And that eMACH.ai, what we have launched last year, more than 50 deals have happened. Last quarter, if you observe, there are 8 deals in North America, and 6 deals out of them is a AI deals. So it's a good beginning to show that our AI is picking up in a market. eMACH is picking up in a market. And these deals are across all the continents, all the 6 markets: Australia, APAC, Middle East, India, Europe, and Americas. So very few companies can forecast that a product is acceptable in all the markets. So eMACH.ai, yeah.
Yeah, so Mr. Jain, so just a point, and could you mention that a lot of these deals are coming from various continents? Because I just wanted to ask you, one of the deals that you missed out on, and you cited political issues over there, in your bid pipeline, do you have any more deals with Canada as a backdrop? And I mean, is there any further risk of a repeat happening there? How important is Canada as a geography for you?
Canada as a geography is very good, and we have a large traction in Canada. It's a government deal which created the problem, not as a geography. Commercial banks are really loving our proposition there, so we are winning more deals in Canada. It's only the government deals. It was more.
Okay, got it. It was a government deal which didn't go your way. Understood. So on margins, and you mentioned there are a lot of sort of the deals that involve AI. I mean, they're also working well for you. So you, at the end of fourth quarter, are at about 22.2%. So is this level sustainable? Do you think there's scope for improvement as we roll forward in this year?
Yeah. We are saying that it can improve up to 24%, 22.2% can go up to 24% on yearly basis. So don't count me on quarterly basis. Every quarter I'm not able to maintain it, but 24% is doable in this. Well, that's what we planned for. So we plan for 25%, 24% will be doable this year on EBITDA margin. So that's what we are looking at.
Okay. While two large deals didn't fructify last year, even in Q4, you did say that some deals got delayed and some got carried forward. Are these some smaller size deals, and what can you guide in terms of deal closures? Are you getting impacted on account of that? What was the size of these deals which didn't materialize in Q4, which hurt you?
Yeah, I think this is a regular phenomenon now. So anybody who's tracking the stock over the last 3 years will find some deals are getting postponed. This may be in the range of $2 to $5 million typical deal size, which can shift from quarter one to quarter two. So some quarters like last year, Q4 become extremely good. So this is not a quarter to quarter story, but yeah, as you are specifically asking Q4, that is what I would like to say. That's $2 million deal is getting postponed for the next quarter.
Okay, all right, Mr. Jain, we'll leave it on that note, and wish you better luck for the first quarter that we're in, and of course for the rest of the year as well. Thanks for joining in. On that note, we do have to take a very quick break. We'll get you more on the markets in just a bit.